Hello and welcome to the channel. In this video I discuss a simple short-term strategy based on the 2-period RSI indicator. It is a mean reversion strategy based on extreme price movements. The basic premise of the strategy is that extreme price movements always return to their average price. In our documentation section you will find this article that explains this concept in even more detail, and a link to the article can be found at the bottom of this video. The strategy shown in this video differs from another one, also a 2-period RSI based strategy developed by the American trader Larry Connors, in which overbought and oversold situations are identified to which the trader then tries to respond. That strategy focuses in particular on the signals which occur in the direction of the prevailing long-term trend, and as a result that specific strategy has characteristics more closely resembling a price retracement trend strategy. The strategy I discuss in this video is intended as a swing trading method but can also serve as a basis for day traders. The method consists of 3 steps which must be fulfilled before an actual trade setup can be considered. Obviously, in order for a mean price reversion to occur, there must first be a clear price extreme. And to identify such a price extreme, you can refer to the distance of the current price relative to its standard average price, for example an SMA 20. This chart of Tilray Brands stock shows such a price extreme. A sudden very sharp rise from March 23 with a peak price on March 27 indicates the upward price extreme where the price deviates far from its 20-day simple moving average. A similar price extreme but on the bearish side is seen in the stock of BioNTech, a sharply declining price leading to a downward price extreme where the price has deviated significantly from its SMA 20. Now the great advantage of a stock screener is that with a few smart price filters you can easily create a screen that looks for such price extremes fully automatically. Finding good setups is therefore not only much faster but also much more objective. This screen, for example, shows all stocks that are at their lowest point in the last 10 days and are at least 15% lower than the SMA 20. The RSI filter ensures that we only keep stocks whose 2-period RSI value is lower than 10, and this basic selection can then be used to further manually screen for the most interesting candidates. Now, using the 2-period RSI, we try to identify the moment at which the recovery movement may occur. We do so by looking for the moment on the chart when the 2-period RSI indicates a value below 10, which is bullish, or above 90, which is bearish. In this TLRY chart, we have added the RSI indicator, and you can see that its value is quoting above 90 as of February 24, indicating an extremely overbought situation. Also on date of February 25, the RSI is still quoting above 90. As for BNTX, we notice a 2-period RSI lower than 10 from January 18 through January 21. An upward or downward price extreme accompanied by a 2-period RSI value quoting above 90 or below 10 are the 2 necessary conditions before this strategy can be applied. This is the final step before we can configure the actual setup to enter the market. The 2-period RSI is falling below the 70 level, which is the indicated signal for a short setup. In the TLRY chart, the 2-period RSI drops below 70 after the March 28 trading day. The 2-period RSI, which rises again above the 30 level, is the indicated signal for a long setup, and this can be observed in the chart of BNTX at the date of January 25th. Remember that these specific setups to buy or sell are only withheld if these first 3 steps are completed. The use of a buy or a sell stop limit order allows us to determine the entry very precisely. With a sell stop limit order, we define that the price of the stock must first continue to fall below the low of the signal candle before the short order becomes active. This is the case for TLRY. And in the case of BNTX, a buy stop limit order is used where the price first has to rise above the high of the last candle before the order becomes active and can be executed. For BNTX, the order is triggered the very next trading day and barely 6 days later the price hits the SMA 20, which is the first target. Depending on how you continue to manage the position, some or all of the profit may be cashed in at this level. If you do not wish to close the position completely, you can decide to adjust the stop loss upwards in order to reduce the risk significantly. As for TLRY, the price initially rose further so that the initial sell order was not executed. As a result, the 2-period RSI re-entered the oversold area on March 29. The next day, a bearish doji candle was formed, and at the same time the 2-period RSI fell below the 70 level for the second time. A modified short entry just below the low of this doji candle with a stop loss above the high was definitely a setup to consider in the context of this mean reversion strategy. The position was never compromised in the process, and the SMA 20 was finally reached on the date of April 7. A long setup in WB, price extreme down, price deviates significantly from the SMA 20. Then we have a 2-period RSI which goes below 10. Then it rises again above 30, and however there is no entry the next day because the high of the candle indicated by the blue vertical line is not taken out. So the RSI indicator drops below the 30 level again. And the next trading day the RSI is again above 30, and this time the high of the candle indicated by the green arrow is taken out, and therefore we have a long entry with a stop loss below the low of the current price range. Finally, within a few days the first target is reached as the SMA 20. Next is a long setup in IAS, a price extreme down, price deviates significantly from the SMA 20. The 2-period RSI indicator goes below 10, and then it rises again above 30, and the high of the candle indicated by the green arrow is taken out, so a long entry with a stop loss below the low of the downward price range. And the first target is reached at the SMA 20. And the last one is a short setup in EIGR, so a price extreme upside. Price deviates significantly from the SMA 20. The 2-period RSI indicator rises above 90, and then it falls back again below 70. The low of the candle indicated by the orange arrow is taken out, so a short entry with a stop loss above the high of the upward price range is set, and the first target is also reached at the SMA 20. Some important considerations for this strategy. Make sure that the price extreme is clearly visible. The greater the strength and speed with which the price has deviated from the average line, the greater the chance that a corrective movement will follow, pushing the price back in the direction of the average price. This strategy will prove especially useful in highly volatile markets where price movements are fierce and nervous, and where even very solid companies may suffer from temporary fierce price declines that are inconsistent with their underlying fundamentals. The reverse is also true. Extreme sentiment can also cause companies that are barely surviving to suddenly experience irrational price increases. The price extremes can be very well recognized with this strategy, but be sure to investigate the underlying reason. Respect your stop loss at all times. A powerful move can sometimes last much longer than expected, especially for moves that have an underlying fundamental reason, such as company results that are far above expectations. Things can go very fast in a very short time. Do not try to anticipate the counter move. Wait patiently until the RSI recovers from the overbought or oversold status, and always use the stop limit orders which are set slightly higher or lower than the high or low of the trigger candle. By doing so, you will be able to avoid a lot of false signals. And don't simply base your strategy on one indicator, but try to find other additional elements that support your view and setup. A recovery move, for example, from an important support level on a higher time frame, or the shape of the signal candle itself, like a bullish hammer or a bullish engulfing pen. The more converging elements, the stronger the setup will be. In our trading ideas section, there are two different 2-period RSI screens available, a long and a short version. You can use these as a basis for identifying setups such as the ones covered in this video. So please feel free to leave any questions or comments in the comment section below. Many thanks for watching the video, and don't forget to like the video and subscribe to the channel to be notified of upcoming videos. Hope to see you soon. Trade safe.